Welcome to another talk on money, business, and investing. My name is Jose. I'm the founder and chairman of Master Investor. Ensure to head over to our website and get our digital courses, financial tools, and high quality financial education that we have available for all of our community to enjoy and apply into their lives so that we can empower our positive cash flow, ultimately increasing our wealth. Today's topic is going to be how to secure our financial future. Learn why majority of the population lacks understanding of money. Summary: retirement anxiety is real for most people. Prepare for it with a winning business plan. Passive saving won't secure a financial future. Take charge and actively invest instead of saving without a winning business plan. Knowing is not enough. Invest intelligently so that we can improve our bottom line, also known as positive cash flow. And why aren't so many doing so? Why most people around the world are concerned, and here's how we can address it. We will discuss the bonus topic at the end of today's talk. What are the crucial steps to jumpstart our positive cash flow? All investors, whether new or experienced, need guidance, financial education, mentors, and planning. Most people understand the importance of investing, just as they know they should maintain healthy diet and exercise. Yet millions remain inactive investors. At best, those who invest without a winning business plan, in fact, are gamblers, not investors. We define investing here at Master Investor as having a winning business plan with a lucrative exit strategy. When we observe those who say that they are investing, many lack what investing is, which is a winning business plan, but not limited to that only. A business is a system of systems that requires key elements in place in order to succeed at building wealth. Active investors, also known as inside investors, rely on our investments for passive income instead of traditional jobs, which provides earned income. There's a big difference in the types of income that exist. There are three main types of income, and they have different tax rules. The following are the types of income that anyone can build. Number one, earned income. Number two, capital gains income. And number three, passive income. Now, the highest taxed income of the three is earned income. And that income comes from selling time for money or having a job, giving the employees and self-employed people no room to become wealthy, as their hard-earned money is taxed at the highest bracket. Before they get to touch their earned income, majority of it is gone via taxes, Social Security, and other mandatory fees. For instance, Master Investor earns monthly positive cash flow from our investments, allowing the founder, myself, and investors to forego employment and focus on creating solutions for the world. Remember, in order to become wealthier, we have to become more generous. We have to find a solution to serve to the world, something that is in high demand that we can deliver with a system of systems. And when we do that, then we get rewarded with positive cash flow, or also known as passive income. Moreover, by doing so, we are also creating jobs for the economy and for those who decide to only build earned income. The government incentivizes us for creating jobs and investing in sectors that they are wanting to grow in the economy. Every investor, whether new or experienced, needs direction, mentors, and motivation, like we mentioned. This distinction is akin to amateur versus professional golfers. Amateurs may excel, but can they sustain themselves through golf? Professionals possess the resilience and skills to generate income consistently while playing golf professionally. At 65, many amateur investors are forced to turn pro, whether they want to or not. which can be unsettling as they lack the 3 E's of the master investor. Number 1 E is financial education. Number 2 E is financial experience. And number 3 E is excess of positive cash flow. So a great habit to adopt is to really invest in high quality financial education daily so that we can improve our mindset and also our lingo. That way we can communicate with the professionals that we need in our team so that we can fulfill the mission of our businesses. And then we need to have financial experience. We need to be actively investing, and we need to be involved in the acquisition and putting the business plan together, raising the capital, putting the team together, and everything that the business needs in order to run on its own to be able to solve the problem that was created to solve. And number 3, we have to receive passive income, or also known as positive cash flow. That's how we determine that we are successfully winning and investing, because we are receiving the reward, which is passive income. The problem in the world is that there is a lack of financial education, which makes people perish when investing. Knowing the rules and principles of the game is critical for success. Majority of people tend to be guided by opinions rather than facts. Knowing the difference between facts and opinions is important, due to the fact that most people don't understand business and investing. They operate on the left side of the cash flow circle with the poor mindset and context. As we can see in the diagram below, we have the cash flow circle showing the 2 types of mindset that exist in money. There are the wealthy mindset on the right side of the cash flow circle, and the poor mindset is found on the left side of the cash flow circle. We are playing the game of money, and it is up to each of us to master the game so that we can live a life of fulfillment. As we can see, the 2 types of mindset are well demonstrated in the diagram in front of us, which it shows that on the left side of the cash flow circle, we find the employee and the self-employed operating with a poor mindset. They pay 40% in taxes and 60% in taxes for the self-employed, making them the highest tax bracket, which is on the left side of the cash flow circle via earned income. That's the highest tax income, earned income. And on the right side, we find the business owner and inside investor. Business owner pays around 20% or less in taxes, depending on our tax strategy and our business plan. And then the inside investor would pay, in many instances, 0 in taxes, because we are building tax-free wealth with the proper business plan and the tax strategy, investing in the right sectors that the government wants us to invest in so that we can get tax advantages and other incentives, because the government now becomes partner of us because we're doing exactly what the tax code and the government wants us to do, which is invest in certain areas that will improve the economy. Below is a serious examination of why people avoid investing, despite knowing they should. Most people are operating from the left side of the cash flow circle with the poor mindset instead of using the wealthy mindset by switching to the right side of the cash flow circle, starting a new business. Even if they have a job that they're currently working to pay their bills, they can still create some time so that they can launch their first business, and that business can be utilized to create other businesses and invest in other asset classes for passive income specifically. That's the type of income we want to focus on because it gives us the most leverage. We can minimize taxes all the way to 0. Passive income is taxed at the lowest bracket. So we want to be focusing on that type of income. Here is a list of why most people don't invest. Number 1, they have no financial education, financial experience, and excess of positive cash flow. Number 2, their budget allocates $20, for example, weekly for lottery tickets, convinced it will pay off. Number 3, they save money without business plan, thinking inflation will make their money grow. Number 4, they believe that older people don't eat much, so they don't need to worry about what they're going to eat when they get older. Even though inflation is making everything more expensive because money loses value. When inflation rises, that means that our currency is losing value. It's going back to its intrinsic value, which is zero. Every currency in the history of humankind has always gone back to its natural state, which is zero. Remember, 1971, August 15, that's when President Nixon separated the gold standard from the US dollar. From that point, money became monopoly money, fiat money, fake money, paper money, and just an idea backed up by confidence. It is a currency. It's not longer backed up by gold. Number 5, they wait at home for the publisher's band to deliver their check. Number 6, their money is safely buried in the backyard, bank account, or under the mattress. Losing value. It's not growing. They think it's growing because they lack financial education. They don't understand the changes in the law that we just talked about, like 1971, when President Nixon separated the gold standard from the US dollar. That was a critical point in the game of money. It actually gives us more opportunities for everyone to create wealth faster than ever before, because we can utilize fake money. We can utilize debt, because money is created with debt today. It's not backed up by gold anymore. It's backed up by an idea with confidence. So if we can put a business plan together that is winning, that we can show the assets and liabilities, and we can determine our positive cash flow at the end of the day when everything is paid, then we can attract money, because money is always looking for places to be able to multiply and go to work hard in the investment, right? So we want to attract money, and we want to attract other investors because we have the right lingo, we have the right attitude, we have the winning business plan, and we have the right team. A lot of people that have money, they're looking for other people that can bring them good businesses so that their money can grow. And that's when we're going to become creative and raise capital. That's why we don't need our own capital to invest. An inside investor, even though we have money, we still utilize OPM, other people's money, legally, so that we can grow our wealth faster. Using the bank's money is a way of OPM, or other people's money, because that money is the saver's money, and it's also the bank's money, which they print from thin air because they have savers' money in their accounts. And so the Federal Reserve Bank allows the banks to print more money because they have more accounts in their savings. And so the bank is not in the business of savings. The bank is in the business of lending money for an interest rate. And so they are interested in printing money more and more by lending that money to the right group of people with the right mindset, with the wealthy mindset, those operating on the right side of the cash flow circle. And when we have the wealthy context, then we can approach a bank, we can approach the right investors to acquire additional funds for our investments. Number 7, they expect their rich family members to pass away soon. Number 8, they think their little Matilda is destined to be a Hollywood star. Number 9, they think to cash in their collections for retirement. Number 10, they believe their dot-com stocks will rebound. 11, they rely solely on Social Security and bad investments. Number 12, they intend to marry a younger partner at 60 and rely on their support. Number 13, they invest in passively manner without a winning business plan by giving their money away to the brokers who are often broke, or others to invest their hard-earned money from their labor, put in that money in bad investments. without positive cash flow. And that's what it results when a person doesn't have financial education and they often believe that investing is risky. And so they give their money away to somebody else that also doesn't know how to invest properly. And they end up having no positive cash flow, and they have a bad taste for investments because they only have experienced losses because they lack a financial plan that is lucrative. So investing is having a winning plan. We should never invest without having a winning plan and knowing everything about the investment. We need to know with facts, not with opinions. We need to know exactly how much money we're going to get back after we start the investment. We need to know the assets, the liabilities, the expenses, the income of that investment. And we need to determine with facts whether that is a sound or a toxic investment. Sometimes we need a break from the old ways and adopt the new ways. Technology is changing fast and it affects the world at the same time. Great habits to possess is to be able to be flexible, learn, and adapt quickly in today's world. Investing for positive cash flow, or also known as passive income. Many people mistakenly believe they are investors when they are not. They often think their 401ks and IRAs, which includes stocks, bonds, or mutual funds, are true investments. In reality, these are more likely saving plans. Those with such retirement accounts are considered passive investors instead of active or inside investors. They are just saving for retirement. And often those accounts will be bleed out by the time they want to get their money out because those companies are not guaranteed to be still functioning in the next 30 years. That's why it's important to not give our money away to these brokers and other gurus that tend to know the future. We need to do our research. We need to study history about money. We need to actively invest so that we can get financial experience. No one can take that experience from us when we're actively involved in building and controlling sound investments. If a person owns and lives in their home, he or she should not view it as a sound investment because it is not putting positive cash flow in their pocket on autopilot. Without monthly positive cash flow, aka passive income, and with expenses like mortgage payments, utilities, property taxes, insurance, and maintenance, such house is a liability, not an asset. It could become an asset if we rent it out for passive income to tenants, short and long term. When the passive income, aka positive cash flow, comes in and exceeds the expenses of the house, then it is an asset. Or if the house is sold for a one-time profit, aka capital gains income, then at that point it becomes an asset. Professional or inside investors prioritize positive cash flow before capital gains income. It takes higher financial intelligence to be able to acquire and spot opportunities with positive cash flow assets. Ideally, we want both. We understand that not all the assets can provide passive income. Some of the assets in certain asset classes will only give us capital gains income. And we can also apply advanced strategies when we do obtain capital gains income to defer taxes or waive the mandatory payment for taxes legally. Because, for example, in real estate, using a 1031 exchange, we can roll over our profits from the house or the property that we sold into a bigger property within a certain amount of time. And we need to follow certain requirements in the law so that we can qualify for the incentives of deferring taxes and not paying taxes on those capital gains at that moment. So we can utilize the tax code and the corporate law to keep more of our money into our pocket, and of course make it work harder in other investments so that we can create more wealth. Investing solely for capital gains income without a winning business plan is gambling and not true investing. Investing is having a winning business plan with a lucrative exit strategy. We should always invest with facts. Doing due diligence will help us separate the opinions from the facts and make better investment decisions. Don't let popular excuses hold us back. We don't need money alone to make money. We need financial education first in order to be able to raise capital and make more money. Many people avoid investing because they claim that they don't have the money to invest. But even if they had the money to invest, they will not be able to invest successfully because they lack the most important thing, the 3 E's of a master investor, which is financial education, financial experience, and excess of positive cash flow. They need to first invest in the mindset so that we can switch the old ways with the new ways, adopt the wealthy context, and operate with that mindset. And when we do that, then we can achieve financial freedom and improve our bottom line or wealth, right? Our positive cash flow. That's how we really know that we are on track of becoming wealthier, because we are focusing on building the assets column with assets that we control for passive income. And we want to reach infinite return on investment. That's the holy grail of investing. Infinite return on investment. That's when we have none of our money into the deal and we still collect passive income. We either use 100% financing to acquire the deal, and we are collecting passive income even after we pay the mortgage or the payment of that loan back. We're making the payments and we still keep some of the money as a profit because it's exceeding the amount that we need to pay back. So if we have none of our money into the deal and we still control the deal, we still receiving passive income, then that is infinite return on investment. That is money for nothing. And that's what we want to achieve on the reinvestment. We want to have cash cows printing us money over and over again without having to invest more money into that deal. And of course, recouping all of our money that we invested. We use any of our money initially to start that business or investment. We recoup that back as soon as possible, and then we continue to control and manage that asset for passive income. In reality, first, we must possess the wealthy mindset and context to create wealth without using our money. It takes a higher level of financial intelligence to be able to create passive income from thin air with good debt and tax-free. Here at Master Investor, we claim that in order to truly win at the game of money in real life, we have to master raising capital and selling with smart systems. However, there is OPM, other people's money, available if we learn to recognize opportunities. Money is always looking for a profitable investment with a winning business plan. Invest in our financial education to identify good opportunities and turn sellers' problems into our profits and cash flow. A prime example of OPM is partnering with a bank for real estate investments. They provide most of the funding while we benefit from tax advantages, depreciation, appreciation, also known as phantom cash flow, passive income, and capital gains income. Phantom cash flow comes from having assets that produce passive income. In this example will be real estate. And phantom cash flow will come from depreciation, taxes, appreciation. It shows up somewhere else as income that the average person cannot see, but because we have the financial education, we can utilize these different strategies to print even more money legally. It is essential to understand that in the game of money, there are two types of mindset, the poor mindset and wealthy mindset. Additionally, wealth is not measured just with money. It requires us to take in consideration our free time. In other words, wealth is measured by determining the time we can live without working for earned income. Using our positive cash flow, aka passive income, and any other available funds that we possess today to fulfill all of our expenses. Some people cannot even last 3 weeks without working before running out of their savings, right? So we need to figure out where we are financially today and build a winning business plan, start putting our savings into an investment that actually multiplies that money and will give us positive cash flow now and for the long term as well. The poor mindset is possessed by most people. See the diagram below to understand why majority of people do not achieve financial freedom and true wealth in their lives, regardless of how hard the person works and how much money it gets paid for the job. It does not give them the total freedom, as they must continue to exchange or sell their time for earned income. Remember, earned income is taxed at the highest bracket. Also, due to the fact that since the people with the poor mindset focuses all day long on earned income, the type of income and job gets in the way of their path to becoming wealthy. Ironically, those who work hard at a job every day have not time to create true wealth. The people who only focus on the left side of the cash flow circle and build and earn income will not experience total freedom, which comes from cash flowing assets. As we can see on the diagram in front of us, we have the poor mindset. We have a financial statement of the poor mindset and the way they prioritize their expenses. And we can see that in the income statement, we have the income column. The income that they receive is earned income. So this individual works primarily for earned income by exchanging time for money. And on the expenses column, we can see that the priorities are set as follows. Number 1, pay taxes. Number 2, acquire liabilities. Number 3, acquire assets. It first pays taxes at the highest rates. Next, it takes on liabilities. Then it tries to gamble on assets with no plan. Poor mindset tries to buy assets with after-tax dollars. The employed and self-employed, those on the left side of the cash flow circle, often cannot afford sound or cash flowing assets after paying taxes, liabilities, and all expenses. Focus only on earned income, which is taxed at the highest rates by law. The wealthy mindset is possessed by a small percentage of the population. The diagram below shows us why those on the right side of the cash flow circle are financially free and why we can build true wealth. It comes down to our context, expenses, and priorities. We put investing as number 1 priority in our expenses column, making us to focus on building passive income, aka positive cash flow. Passive income can be tax free as long as we have a winning business plan and a tax strategy ahead of us and ahead of the year. Consult with a team of professionals. Choose them wisely, as they are not all made equal. Some professionals are made for the poor mindset and those operating on the left side of the cash flow circle. And other professionals have the wealthy context, understand the wealthy mindset, and are made for those on the right side of the cash flow circle. In other words, not all attorneys are made for the wealthy. We need to choose them wisely, and we need to understand more about business and investing so that we can pick the right choice when it comes down to it. The poor mindset thinks about investing last, and they spend majority of their daily time working on earned income instead of focusing on the assets column, like the wealthy mindset or those on the right side of the cash flow circle do. Wealthy mindset. We see the diagram in front of us. We have the income statement, right? We have the income column. It shows that our main income is passive income. And then we have second income as capital gains income. we focus on investing in working for passive income, positive cash flow primarily. And then on our expenses column, we have investing as number one, acquire assets. We are actively investing before anything else. Before any of the bills are paid, the first thing we do on our expenses column is acquire, invest in assets. Number two, pay taxes if any. Remember, we're building tax-free wealth. So a lot of times we get to pay zero in taxes, even though we're making a lot of money via investments. Number three, acquire liabilities. We can acquire any type of liability because we have assets that are cash flowing that will pay for the expense of that liability. So we can literally get everything for free legally because we have positioned ourselves with the wealthy mindset in the game of money. A wealthy mindset prioritizes acquiring assets before paying taxes, often resulting in zero tax payments. We use these assets to cover liabilities, allowing us to obtain everything at no cost. This is achieved legally by leveraging the tax code and corporate law, supported by a winning business plan with a profitable exit strategy. As business owners and inside investors, we are taxed at the lowest rate. Our businesses in capital buy other assets first, and then we pay taxes after, if any. There are serious reasons for inaction, why people do not invest. Number one, entitlement mentality. Many people expect the government or companies to care for them after their working days. Despite the instability of Social Security and Medicare, here at Master Investor, we believe everyone should learn self-sufficiency. Schools should teach people how to support themselves instead of fostering entitlement. Number two, lack of vision. Many cannot see beyond the present. Aging is unexpected. The first baby boomers are turning 78, and many assume they can keep working indefinitely. They fail to recognize that their bodies may not always cooperate. The cost of long-term care can exceed most incomes, raising concerns as millions of baby boomers will need care. Number three, inadequate or lack of financial education. The common advice to go to school, get good grades, then get a good job reflects an entitlement mentality and a lack of a long-term vision. We need financial education that prepares us for life after employment, not just for securing a job. Our educational system must modernize to equip people for real-world financial challenges. Number four, what is stopping majority of people? Now that we understand the importance of investing, consider what is holding others back. Being passive and not active about our financial freedom is harmful and cyclical. Stop relying on luck and blind faith in the system. Instead of focus on our financial education and create a winning business plan. Learn how money works, prioritize cash flow investments, and take control of our retirement by becoming financially intelligent. Digital age investment opportunities. Our generation's gold rush. Our generation has access to investment opportunities that weren't available a decade ago, but many are misusing them. App-based investing platforms like Robinhood and Acorns have made investing easy, but they have turned it into a game. Buying $10 worth of Tesla stock is not building wealth, it is gambling. Real wealth building demands having a winning business plan, consistent investing over time, understanding our investments, a long-term strategy, diversification across all the asset classes, know the difference between facts and opinions, using good debt, building and acquiring assets that produce passive income, having a tax strategy to create tax-free wealth. How to use investment apps effectively. Here are some ways to use the apps. Number one, automate our investments by setting up automatic transfers to low-cost index funds. Number 2, practice dollar cost averaging by investing the same amount regularly, no matter the market conditions. Number 3, concentrate on total market funds instead of picking individual stocks. Number 4, reinvest dividends to benefit from compound interest. Alternative investments. We now have access to alternative investments that were previously exclusive to the wealthy. Number 1, real estate crowdfunding. Use platforms like Fundrise to invest small amounts in real estate. Number 2, peer-to-peer lending. Lend money directly to individuals or businesses for an interest rate. We basically act like the bank. Number 3, cryptocurrency. We may limit it to 5 and 13% of our portfolio. Number 4, collectibles. Invest in items like sneakers, exclusive cars, or trading cards, but be aware of the risks. House hacking and beyond. Real estate is key to building wealth, but our generation must adapt this approach. Start by house hacking. Buy a property, live in part of it, and rent it out the rest of the property to others. This method suits Gen Z because it can access lower down payment loans, FHA, VA, gain landlord experience while reducing risk. It builds equity while someone else covers most of the mortgage. It can expand to more properties over time. For example, if we purchase a duplex for $200,000 with a 3.5% down payment, that would be $7,000, and live in one unit while renting the other for $1,200 per month, we effectively live for free while building equity, assuming our mortgage payment is $1,000 per month and receiving passive income at the same time. Now that house and that property becomes an asset because it's putting money into our pocket actively today, not in the future, right now. If it's not putting money in our pocket right now, then it's a liability. If it's only costs us money for us, then it's not an asset. It has to put money into our pocket in the form of passive income in order for us to call it an asset, or sometimes we'll get capital gains income from the asset because we sold the house for a profit. And at that point, it becomes an asset. Remember that once we have financial education, then we can execute with precision by having a winning business plan for every investment we wish to embark. Investing is defined in our community here at Master Investor as having a winning business plan based on facts, not opinions, and with a lucrative exit strategy. Multi-generational strategies. Consider teaming up with family members and others who wish to have financial freedom and true wealth. Parents can provide the down payment while their children manage the property. Share profits and build equity together. Gradually scale to multiple properties and bigger. Once we understand that the job number 1 of a master investor is to raise capital, to invest in sound assets that cash flow in any economy, and that the number 1 skill is to sell with a system of systems, then we're on the track of building true wealth. Being creative is key to being able to raise capital. Poor mindset in finance. Uneducated people only use their own money to invest. In other words, we don't have to use our own money to invest when we can raise capital via ethical ways, using OPM, other people's money, right? Using the bank's money, the investor's money, using family members' money and other partners, and also the customers' money, because we can raise capital. We can sell the product without even having the product in our hands. We can do a lot of different strategies that are legal and ethical to be able to create the passive income and start receiving that type of income. Real estate investments trust, REITs. If direct ownership or control isn't for us yet, REITs let us invest in real estate with smaller amounts. They are liquid, diversified, and provide dividends, built in multiple income streams. the new job security. Job security is a thing of the past. Company loyalty no longer exists. True security comes from having multiple income streams that come from cash flow and assets that we control with our legal entities. Doing business with a legal entity, a corporate, is needed to build true wealth and give us protection from any liability that comes from business and investment. Regardless of where we are, we must be an inside investor. Our motto is to be, do, and have. We must first shift our core values and beliefs about money to the wealthy context. At the end, those on the right side of the cash flow circle will thrive in any economy due to the effects of positive cash flow. As we master the game of money, we are a witness to the fact that we can position ourselves legally to obtain anything for free. In other words, our focus is on working to build passive income, also known as positive cash flow, from the assets column. And as we gain more cash flow into our pockets, then that will be used to acquire any liability that we wish to have, making it free because the funds are coming in to the business. It's coming in from the business instead of ourselves. So the money that is being used to pay for the liabilities expense is produced by the business that we put together, by the investment that we are controlling. And that investment could be solely to pay for a certain liability or many liabilities, right? So we want to look at every liability in that manner. If we want to have something of luxury, then let's create an asset that will pay for that liability's expense. So it becomes free. We don't have to worry about working for earned income to make the payments for that liability, because now we have an asset specifically catered to pay and take care of all the expenses of that liability. We will not focus on only using our own capital. We must be creative and raise capital to invest. Even when we have great amounts of money in our control, we will still raise capital with our capital and use our wisdom to invest. Types of income. According to Master Investor, there are three main income types. Number one, earned income, salary from a job. This income is taxed at the highest bracket, which is between 40% and 60% taxes, as we discussed earlier. Number two, capital gains income, earnings from dividends, interest, and capital gains. It is a one-time profit that comes from an asset that we sold. This income pays about 20% on taxes. And sometimes, using certain laws in certain sectors in the tax code, it allows us to defer the taxes on capital gains income. Number three, passive income, also known as positive cash flow, revenue from rental properties, royalties, and business income. This income pays zero in taxes legally because the laws in the tax code allows us to minimize taxes to zero when we have a tax strategy and we can document everything properly according to the law. Achieve when we have a winning business plan and a tax strategy to create tax-free wealth legally. We have another diagram in front of us, how the wealthy invest. It shows exactly how we focus solely on the right side of the cash flow circle. The business owner, we own, control, and build systems that generate cash flow and solve problems. And as an inside investor, we are capitalist investors. We utilize money, debt, OPM, return on investment, infinite return on investment, in any capital, including cryptocurrency, to pay for our investments, to acquire to investments that produce passive income and sometimes capital gains income. However, we focus on the right side of the cash flow circle. We solely go back and forth from business owner and inside investor. So we acquire a new business. Now that business is producing cash flow, and we're using that cash flow to acquire a different type of business that produces more cash flow. And now we have two businesses producing cash flow, and we're still using that cash flow to acquire the third business. And we grow our portfolio in that manner, compounding capital, actively investing, getting financial education daily so that we can expand our strategies, we can grow our passive income. There's not a limit when we operate on the right side of the cash flow circle. However, there is a limit on the left side of the cash flow circle. The employee and self-employed, they can only see so many clients a day. They have to show up to make money. If they don't show up and they work for that client, they don't get paid. So think about all of these things and figure out where we are financially today so that we can create a winning business plan with a lucrative exit strategy so that we can reach financial freedom and then continue to grow our wealth. Wealthy individuals focus on developing primarily passive income and capital gains income, while the poor and middle class or the poor mindset concentrates solely on earned income. Regardless of their income level, the middle class and poor class could have a certain amount of money in their bank account. That does not determine how wealthy they are. They still have to show up to work for earned income. If they stop working, they stop earning money. Okay? So we want to focus on our assets column, starting a first side hustle to create time to invest. Begin with the skills we already possess. Number 1, freelance writing, graphic design, or web development. Number 2, online tutoring or creating courses. Number 3, e-commerce or drop shipping. 4, content creation on platforms like YouTube, TikTok, or Instagram. 5, consulting in our area of expertise. Many treat side hustles as part-time jobs, trading time for money. To build wealth, create systems that generate passive income without our constant involvement. Bonus question: what are the crucial steps to jumpstart our passive cash flow? When it comes to building wealth and investing, understanding our strategy and staying adaptable is crucial. Establishing systems to automate our businesses and manage them effectively. Request feedback, whether positive or negative, and remove negative habits. Achieve a balance between confidence and humility. As we said earlier, every investor, whether new or experienced, needs guidance, mentors, and motivation, but not limited. Wealthy individuals have long understood key principles that can help all investors, whether day traders, aspiring entrepreneurs, or seasoned real estate investors, improve our performance and make wise choices when it comes to investing. As we explore Master Investors, what are the crucial steps to jumpstart our cash flow? Reflect on how each applies to our investments. Don't dismiss any step as too challenging. The key is to hold ourselves accountable and when applying them. These strategies are proven, so let's embrace them to achieve greater success. Step 1, know our game plan and outcome. Educated investors know how to make deals. Successful investors understand why. Without a plan, our portfolio may be diverse but stagnant. Know the purpose behind each investment. Aimless opportunities lead to unproductive portfolios that won't help us reach our financial goals. To succeed, define our objectives and create an investment portfolio detailing the tools we will use to achieve a specific financial targets. Planning takes effort, but it is essential for success. Therefore, we have to do our due diligence on every investment before investing. Step 2, be agile. As we implement our plans, be ready to adapt. Change is a natural part of investing. Flexibility is crucial for enhancing our cash flow. Controlling our emotions is key to being agile. Means acting swiftly to seize opportunities while having the necessary resources. Don't limit ourselves to what we already know. Agility combines speed and resources to help us identify the right opportunities at the right time. Step number 3, work on our investing business, not any. Agility is like executing plays on the field. Step number 3 is about halftime adjustments. When we focus too closely on our investments, we may lose sight of the bigger picture. Spend time working on our business to gain a broader perspective instead of in our business. We don't want to become an employee of our business. We want to put the right people and the systems in place so that we can continue to grow the leadership in the business overall. We want to keep the bigger picture intact. We want to make the most important decisions for the organization's future. And it requires us to have time and not be involved in the small task of our businesses. That's why it's important to master working on our businesses rather than in our businesses. A lot of people have businesses that they are the employees of those businesses. Basically, they don't have a real business because it's not an asset. They still have to show up to make that business work. A true business can run on its own without the owner and still be able to continue to grow and serve the solution to the clients because it has the system of systems working hard, doing the telling and selling for us on autopilot. 3, our portfolio like a business and strategize to enhance our success. Spend time working on our business to gain a broader perspective. Create and acquire smart systems to manage and automate various aspects of our investments. This allows us to identify ineffective practices and optimize our capital for better use. Step number 4. Be aware of blind spots. Recognizing bad habits can be challenging. Many avoid examining their wrongdoings, especially after achieving some success. Seek feedback from others to uncover blind spots in areas for improvement. Discuss our experience with peers and listen to their insights. Engaging with those who have reached our desired level can help us identify what we need to change for further growth. Small adjustments can lead to significant gains. When receiving feedback, stay objective. Not every opinion will apply, but consider the source and their expertise. There may be valuable insights that can enhance our investing skills. Number 5, step 5, be confident and humble. We have to be confident and humble when it comes to business and investing. Repeating the same actions and expecting different outcomes is madness. In investing, failing to diversify among the different asset classes leads to stagnant returns. While stability is good, pushing beyond our comfort zone can yield higher return on investment. Believe in ourselves and honestly assess our knowledge in areas for growth. The more financial education we have, the more risk we can manage. Investing in business both come with risk, and we need to understand how to manage that risk. We need to be able to take on risk and be comfortable with that. Otherwise, we will not be able to achieve our financial goals. We need to be able to live with the risk because it is attached with investing. Reflect on our journey. Confidence stems from recognizing our past successes. Understand that advancing and investing is not exclusive. It is simply the next chapter in our journey. We don't need all the answers to start, but we must take the first step, maintaining a realistic view of our achievements. Many have benefited from favorable conditions without unique skills, only to face difficulties later. Balance ambition with humility, recognizing that luck plays a role, but skill, knowledge, and strategic choices create most luck. By balancing confidence and humility, we can identify and implement investments suitable for every phase of our investing journey. Every person must fill out a personal financial statement to be able to assess our current financial situation and to begin building the assets column with the proper business plan. We can find a financial statement inside of our digital course, How to Build Cash Flow with the Internet, or by simply going to our website. We have many different financial tools to help our community grow their wealth. Take advantage of them. The foundation of true wealth is found in the ability to read financial statements and improving them with acquiring sound assets. Final thoughts. These crucial steps benefit all investors, from beginners to experts. Each contain fundamental principles that lead to success regardless of market conditions or experience. Master these concepts and apply them diligently to achieve a significantly higher success rate in our investments. The key is investing in high-quality financial education. Ensure to always establish a winning business plan with a lucrative exit strategy when investing in any business. Investing without a plan is not investing, it is gambling. Let's rise above being an average investor or average gamblers by following the new rules of money and adopting the wealthy mindset by operating on the right side of the cash flow circle and becoming an extraordinary inside investor. So the message is, don't be average. Get financial education, invest in personal development, and start investing in real assets that produce passive income that we control with our companies. We want to be actively investing. We want to be able to look at different businesses and decide with precision whether that business or investment is toxic or is a sound investment. Start investing in high quality financial education here at Master Investor. We have 3 ebooks right now with digital courses. What are the 10-year rules of money? How to build cash flow with the internet, turn passive income on. And we also have how to invest in crypto to build wealth, understanding Bitcoin and blockchain. We have other lucrative resources and tools on our website. We have Instagram, we have our podcast, newsletter, YouTube, TikTok courses. We have our Facebook, Discord, and you can also join our inner circle. Make sure that we all start investing in the right type of financial education. We need to get the right team with the right mindset, and we need to start actively investing. Don't give our money away to anybody to invest. Here at Master Investor, we know how to raise capital. We know how to sell with systems. We know how to put money to work in sound investments. Master Investor's mission is to be the authentic global brand for money, business, and investing, elevating the financial well-being of humanity through high-quality financial education, made simple with lucrative opportunities to build passive income, win-win partnerships, and true wealth. If you have any questions or any comment, make sure you put it in the comment section. And today's message is to secure our financial future by investing in financial education, having financial experience because we are actively investing, and of course, by receiving passive income, which is the best type of income to build. We can pay zero in taxes with that type of income, and that income is what really determines how wealthy we are. How many days, how many months, how many years can I go based on the funds that I have now and my passive income without having to work for earned income. And that's how wealthy we are. Make sure you subscribe to the channel, and we will talk next time. Thank you for being here and being part of our community at Master Investor. We appreciate the business. Bye for now.